Underinsurance basically means that there's probably going to be not enough money to rebuild over what you purchased in your insurance policy. So the problem with that is it's very difficult to identify what underinsurance means until further down the road. Because if you look at it right straight out of the chute, people can be very concerned. Well, on my coverage A, which is the dwelling amount, I've got $500,000, but it's going to take me $600,000 or $700,000 to replace the building. Well, there's other parts of the insurance policy that will fill in some of those gaps. So I'm not here to suggest that people aren't underinsured. We had the same thing happen at Waldo Canyon. We thought people were going to be underinsured, and as it turned out, very few of them ended up being underinsured, thankfully. Whether that will be the same trajectory in Boulder is anybody's guess. And the couple of challenges, as you mentioned a little earlier, is we have supply chain issues, we have building code issues, and we have a different strategy on how how the recovery is taking place. And all those things can have a bearing on whether or not people will have enough insurance in the final analysis. Now, we did everything down here to try to streamline the process so that that didn't become a problem. But we're already almost 4 months into the post-Marshall fire, and very few lots have been cleaned up. And whereas if we were to look at our situation down here, by that point in time, by about 4 months in, we were pretty much down to we probably had about 90% cleaned. So again, trajectory is very important. But going back to the underinsurance, so it suggests a gap, and it suggests amounts. But if coverage A isn't enough, there's 2 or 3 other coverages that may fill in the gaps. The first is there's a debris removal, which adds 5%. There's law and ordinance, which usually adds around 10%. These are in addition to the basic coverage A. And then there's what we call extended replacement cost. And what that's designed to do is cover for the supply chain issues, because on almost every fire there's supply chain issues of some sort. And so the 20% is, adds up pretty significantly. So by the time they get done with those and possibly some inflation coverage, hopefully they will be a lot closer to the mark than they first initially indicated. But I think there's a certain panic and a psychology that, oh no, I should have done this and I should have done that, and oh, I'm never going to be able to rebuild, and it's a challenge. But once people start getting their hands around the issue and getting real numbers from their insurance people and their contractors that they're having rebuild their houses, our experience down here with Colorado Springs Together was the problem went away pretty quickly. Whether or not it will go away quickly in Boulder, I have no clue. Although I will tell you that the discussions that I've had with agents and a few of the neighborhood people right after the fire 2 months ago and versus now is there's a little more hope on that front. And a couple of the things that are giving them hope is the municipalities have backed off the codes or made them optional rather than mandatory, and they're beginning to get hard figures from their contractors. And I guess I should say many of them are seeing money from their insurance carriers too. And so hopefully all these things are beginning to give people some hope. But just because those things have happened doesn't mean they're out of the woods yet.
For sure. Some of the stories I've read or watched about the Marshall fire, the victims are saying that they are underinsured to the tune of maybe hundreds of thousands of dollars, even when they updated their insurance somewhat recently before the fire. How does something like that happen?
Well, again, I've seen those stories, and I'm scratching my head because I would prefer seeing hard examples and the real numbers so that we're not panicking. But there's a couple of different ways that can happen. In our business, there's no one way to evaluate buildings. We've used the way I've evaluated buildings for my 40 years as an agent. We never had a problem with it whatsoever, but I never had a wildfire to deal with. So I think there's a couple of little angles to this, and the first angle is that people buy price and they don't buy protection. So I don't know what happened in that transaction, that buying transaction, but in many instances, the agent and the insured are on one wavelength, and that is to save money. That's probably not the right wavelength in the current environment in Colorado. So that's one element. The second element is there are some things in the building trades that we in the insurance business don't have a lot of control over, because most of the tools that we use are based upon historical data from 2 and 3 years ago. Well, with the kind of inflation that we're having right now, 2 and 3 years ago, it's too old. So unless you have some way to build that up, which is usual and customary, that's not the way we do it. And oh, by the way, if we did and we bumped those premiums up by 15 or 20%, or the replacement values, we're also doing that to the premiums, and people, if they're buying on price, don't want to hear that noise. So that's the second thing. The third thing, there are some little idiosyncrasies about the valuation tools. For example, most valuation tools are the two that I am most familiar with, really the major ones, don't insure for foundations. Why? Because foundations never burn. Guess what? When you have 2,500 degrees in your basement burning in a wildfire, your foundation needs to be replaced. That's probably about 10% underinsured right there. And it's just a matter of, in that one peril, that's the only peril that I can really think of that occurs to, it's a little bit underinsured. So at some point in time, we're going to probably need to adjust for that in the insurance industry to figure out a way to deal with that, because not everybody deals with wildfire. But so again, a long answer, but and it's not an exact science. And the last thing is that it's a big game. Everybody, the customer wants to save money, so they go shopping. So what are they comparing to? Are they comparing bottom line? Are they comparing limits? Or are they comparing the internal coverages? And those are the things that you don't know until you get into the specific instances.
Yeah.
And just as an anecdote, I will tell you that my most extreme underinsured case in Colorado Springs was in the Waldo Canyon Fire, was a house that I anticipate was insured for about 60% of what the replacement cost should have been. They were able to rebuild. And how did they do it? Well, they were lucky in a lot of respects. They had those 3 coverages that I mentioned. They had an endorsement on their policy that said in a natural catastrophe will double the extended replacement and the law and ordinance. And they decided that they would do some of the work themselves, and they would buy some of the fixtures themselves. And as it ended up, they built back. And it was particularly pleasing to me because this was a young mom, 3 young daughters. They'd lost everything, and they were really concerned about. And it all started with they got a 10% increase from their previous carrier in the January before. They went and they shopped their insurance, and guess what? They got a lower premium, but they got lower coverage. But fortunately, we were able to get it done for them.